Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Wednesday, the 9th of August, 2017. Another day, another trader bite. We might have something to work with today, though. I'm excited. Not too excited, but more excited than I was yesterday about trading the market. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance currently looks like flight to safety. Gold is up $18 at $1,280.70. Just a small shot away from 1300. The U.S. Treasury bond. So gold's leading the pack with being up 1.43%. 1.43. Gold got as high as $1,282.40 on a December contract. That is the front month for gold. The U.S. Treasury bond follows suit. It is up one handle and 15 ticks, up 0.96% on the futures. The laggards, the biggest laggard is Euro stocks down 1.65% or 58 points. The DAX is down 182.5 points, down almost 1.5%. So clearly this morning coming in, the market's allocating to safety. The overnight news, what's likely driving this, of course, is the news, the back and forth, the rhetoric between North Korea and the U.S. The current president of the U.S. Yesterday, Trump threatened North Korea by saying that the U.S. will respond to threats on its safety with fire and fury, unlike the world has ever seen. To which North Korea responded with they are contemplating a missile strike on Guam, which is a U.S. territory. Um, so what we have is two little guys with big egos talking about nuclear warfare, which I don't think that's very cool. Hopefully, cool heads prevail, but the market is positioning itself in more of a safe stance, taking a safe stance, and it's the reason behind the big drop. And it makes sense that we have a huge drop on such news. Uh, so safety trade is what's on deck today, which gives us some opportunity, some potential opportunity. Um, but really, there's not much more to cover there. We did get the China CPI year on year yesterday. And a few numbers here at 7:30. We still have some more coming out. Sorry, my throat's really scratchy this morning. The China July CPI year on year came in at 1.4, missing its target of 1.5%. PPI came in at 5.5, missing its target of 5.6%. And then uh, this morning we had non-farm productivity at 0.9% higher than 0.7. That's pretty good. And then going forward is we have at 10 o'clock Eastern. Hang on. Going forward to 10 o'clock Eastern, we have wholesale inventories, U.S. wholesale inventories for June expecting 0.6%, wholesale trade expecting 0%, and then we get crude oil today. Crude oil is holding in a balanced pattern at a high volume node, a big composite high volume node. I'll show you the chart in a minute. But crude today, inventories at 10:30 Eastern, expecting a draw of 2.2 million on crude. Distillates a draw of 500,000 and gasoline a draw of 1.5 million. Other than that, I'm not seeing anything else on deck, including earnings. So that's it. Let's take a look at what we expected yesterday. Yesterday was looking for a test up into the naked point of control again at 2478 for a failure down into 24 2469.50. That was the main idea of yesterday, that we're likely to be done to the top side. We ended up with a rally that closed at the high on Monday, and coming in yesterday, we were at the low end of the profile, so I expected some responsive buying at some point right after the open to fail back down. And that's not what happened at all. That plan did not work out at all. Of course, we had a very, very tight market the day before. I did cover that in detail. The alternative plan was if the market pushed lower and out of the prior day's range, Monday's low, and got back in, that I'm looking for a long for a pretty slow grind up back to 24.78. That was hypo 2. That didn't quite work out either. We got something completely different. Here's what we got. So things looked like hypo 2 here, right? Open auction test 24.75, a key figure again. 24.75 has been tested and retested. Pushed down below the prior day's low as expected per hypo 2, and then start to move up. And then the expectation is it pulls back for a grind up, and then the trade is the long on the pullback after testing the low. Once the low is tested, I didn't put this out on Twitter, I put it in the S5 chat room, that the low has a very, very, very low probability, um, has a very low probability of being retested. So the trade is to the long side. However, once we saw the zipper right here consolidate at 24.78, there was really little opportunity to hop on, except if you're a breakout trader. I don't know how many of you are breakout traders. Once we've had days and days and days of 5.5 to 6 point ranges. So I just don't have high expectations to trade a breakout in a range that is pretty much uh, uh, looks like it's done for the day. So we release. Remember, I was telling you that we've been consolidating and tighter and tighter and tighter over a couple weeks now, and that's likely to release one way or another. And the release is to the upside 24.8850, pushing right through. And then right in here, we got the news on this back and forth on the nuclear threat. Um, we did have a good solid test of mid here to the tick 24.8050 for a 2.5 point bounce before the failure. Once it failed, then we've got an opportunity at the pullback. This pullback point here, 24.81, gives us it sets itself 2 ticks above the mid, but also it is the mid of this last swing. So it creates an opportunity for a pushback into the IB at least. So 24.80 down to 24.7775 for a scale out. And then from there, if it returns into the IB, then we're looking for the opening swing high, 24.75 on that trade. Other than that, I didn't see clear opportunities to jump in on structure, but I saw opportunities to jump in on price action alone. So because we had a pretty good range, this push up here has a 16-point rotation. 16-point rotation. That means the market moved in one direction for 16 points without a single 7-tick pullback. That's pretty aggressive. We don't see that very often. That's a third standard deviation move there. So that's what I have to say about yesterday. What are the implications? Oh, what are the implications of yesterday? A couple things. If I pull in the market profile chart, because it shows it a little bit more clearly, we don't quite have an excess high. That's troubling. I would have loved to have seen an excess high yesterday. An excess high looks like this, but inverted. This is an excess high right there. See that? That's an excess high. It's when the market pushes in one direction and finds the opposing force very quickly responding to that price action, and then price moves away. We have not had if you look at these highs, right? These highs, all of these highs that we've made, okay? Not a single one is an excess high, okay? Every time we've pushed to new all-time highs, these are all new all-time highs, the ones I outline. Like this is, I'm not outlining this because it's not an all-time high. Every single all-time high that we've put in has been a well-traded high, which is partly a poor high, which tells me that there's a lot of interest by both sides at the high price. When we see a strong high or a good high or an excess high for this rally, we will want to see a market that rejects that price. It is just too expensive. Sellers step in, you run out of buyers, and it's a clear drive down. And unfortunately, although we had good range yesterday, we did not get that, right? So we went from about 24.67 to about 24.89. It's pretty good. It's 22 points of range or so. But at the top, we did not see a very clear excess high. I think this high is here to stay for some time. We did extend the last high by quite a bit. We generally extend by about 2 points or so. This high was extended quite a bit, and we're trading lower. So this is likely the action we saw yesterday and the high we have here is likely to stick around for a bit. I expect that this BS about the nuclear threat here to go away. I think neither side can afford to launch any ballistic missiles right now. Although to me, it seems like North Korea has a lot less to lose. So it's something that needs to be handled diplomatically, and it will. There will be too much pressure to use annihilation for as a response to a threat. But in either case, if the market then resumes its push back through, it is likely to stall out in the 2480 area. And I believe that high is likely to stay here for a bit. So we might see further exploration down. We're seeing some of that in the overnight session. The market's trading 2464.50. This is where we are right now. This yellow line that's moving up and down, that's where we are currently on the market. And so we are below yesterday's range. This is a good sign for us. This is a good sign for traders. And my expectation is for responsive buying this morning. Here's what we saw overnight. So we closed. There was no attempt. Um, There's no attempt to push to the upside. I see resistance at 24.78 again, 24.78 coming back in. Remember, 24.78 was that naked point of control we tested twice, and the point of the initial turn in yesterday's pullback was 24.78, 24.77, 75. I expect resistance there on the first push up. We'll see how that goes, but this had no buyers in it at all. It reopened and then it sold off even more on the 5 o'clock Central Open, 6 Eastern, and has consolidated with a B-shaped profile. Here's your B, a long liquidation shaped profile, moving away from higher prices and holding steady at the lower prices. This is likely to continue a little bit lower if it has the energy in it. So tested down to 24.59. And it's not able to find buyers. It has stayed, the entire session has stayed below yesterday's close. So overnight inventory is short in price, and it's definitely short on volume. We have not seen negative 14,000 on the delta for quite some time, and we've got pretty decent volume in the overnight session. So um, the overnight has brought in 319,000, 320,000 contracts. We haven't seen that much volume in quite some time. So I'm expecting today to have at least better rotations, which is opportunity for us, opportunity to win and to lose. So Today is likely to give us a few decent moves. Don't be shocked if the market starts to take a bid and push back up to 24.78 from here. It has done so multiple times. And the other thing I want to remind you before I take off here is that we are moving on news. We moved on news. The sell-off is on news. The rally is technical. There's nothing about the rally that says news. The sell-off is on news. So there is a scene of the crime here at about 24.8350 or so, and the market is likely to resume its auction. Okay, so this morning the expectation, the primary expectation, is for the market to open in an open auction. I'm expecting responsive buyers early, so the first impulse move is likely to be up. I'm looking for it to push back to 24.6950, consolidate in here, attempt lower, and then finish with a reattempt at regaining yesterday's closing area at 24.73. This is hypo one. Hypo one um, is for buying on the upside. I expect the market to be responsive here. Why am I expecting it to be responsive? I'm expecting it to be responsive because that's what it has done fairly consistently on sell-offs. We are back in balance, so if I squeeze this through and I include this last day, you can see how balanced this profile is. It's fat. That is the energy that we saw to the upside. This fat profile is what we see dissipate to the upside. And so right now, this is what this energy is still in play. We sold off from it, but still, we're likely to regain this engulfing bearish engulfing day that we had yesterday to the prior 2 days. I expect us to balance somewhere in the middle. That's hypo one. Hypo two, I'm looking for the market to open again responsive. But if we do find sellers, if the market's still in a panic, which is unlikely, we're going to see an impulse down, and then we're looking for an opportunity to push down to 24.5750. I don't expect much more than that. About 12 points of range. That's hypo two. Because we're following a big news day and we're out of balance, we have hypo 3 and 4 that are very much in play today. Hypo 3 is an initial open test down and then drive back up. So we're looking for a drive back in, a very quick move back up into the 24.75 area. That's hypo 3. And then for those who love to day trade and see volatility, hypo 4 makes an attempt back into the range and then gets the drive down. So we're looking for an impulse down. In that case, we're looking for 57.50 very quickly as we did for hypo 2. But then it starts to trend and we're looking for 24.50 to the downside, and that would be hypo 4. Not very likely. The market just has not been able to sustain lower prices, but who knows? Maybe we have had our topping pattern, our slow topping structure, a blowout test to the upside, just a last blow off rally, and now we're going into bear market territory. One-time framing up has been canceled yesterday, so the market's no longer one-time framing up. I'd love to see the market invite the sellers back in, but I'm not holding my breath. Here's the thing: we are traders. We watch what the market does and respond to it. We're not going to catch that first move, but we're using that information to take high odds trades, lower risk, higher odd trades to make a living sustainably for years and years. I've been doing this for 17 years, and I have never been very successful, not for lack of trying, to be one of these people that catch the initial move. And what I've learned through probably hundreds of thousands of dollars in losses, no kidding, what I've learned is it doesn't pay me to predict. What it pays me to do is to respond. And I hope you don't have to pay that much to learn that lesson. Anyway, that's plenty of information. I've gone way over my time. Good luck today, and I'll catch you tomorrow. Take care.